What's up, good people? Welcome back to Stock Up with Larry Jones. Continue to hit that like button and listen. Even if I come up, just go the extra step and check and make sure that that notification bell is actually checked. I know you did it before, but let's make sure that it's actually checked, good people. Things are happening, all right? Let's just leave it at that. If you're new to the page, I'm Stock Up with Larry Jones. We just talk about the market every day, all day. All right, let's go right into it. Hey, first, remember, good guys, limited time only. Get up to 20 now. 20 free stock with Moomoo. 20, all right? That is the top link below. Deposit a minimum of $100 and make sure and claim your free stock, okay? As we use the app with no trading. Also, two, Stock Up You. That is the top link below. Learn more, earn more. The things you didn't learn cost, right? Invest in yourself. Let's keep it going. All right, so as we can see right now, the major indices are pretty flat. As we got new inflation data. We got new inflation data, consumer price index. And on my live this morning, a lot of people say, tell that to the grocery store, right? Tell that to my grocery store. Tell that to my gas pump. And I get it. I feel the same way. So what we're going to do is, instead of playing the usual CNBC inflation data, I want you guys to listen to this for 1 minute. Let's see if we can get this going. And yes.
The number coming in at 4.9%. That's how much more expensive things got between April of this year and April of last year. Now, if you look at March to March, it was 5%. So it is encouraging to see those numbers go down. But again, what the Federal Reserve really wants to see this number at is somewhere closer to 2%. So what's leading to elevated inflation levels? Well, if we take a look at food, energy, and shelter, food actually didn't increase in prices between March and April. So that's certainly good news. Continuing the flatlining that we saw in March. Energy did go up a little bit, just by 0.06% between March and April. And then shelter, the cost of just putting a roof over your head, did increase by 0.4% in the month of April. So again, rent and mortgages getting expensive, but still encouraging to see that that overall number did tick down a little bit.
So Caleb, inflation moving in the right direction, although quite slowly. What are the big takeaways from the data that's just out?
The thing about inflation and prices, they can go up real fast. It just takes a long time for them to come down. And that's what we're seeing. Sticky, high prices around the things that we have to spend on every month. Also in this report, gasoline prices contributing to that little increase we saw in inflation. They're at around $3.51 per gallon on average. Remember, a year ago, they were about $4.37. So they're coming down, but they're going to get a little bit more expensive as we go into the summer. But generally, this nice easing of prices is what the Federal Reserve wants to see. And you're probably going to see that reflected in their next decision in June in around 28 days. Who's counting?
So, you know, the Fed has another decision. And these numbers are giving the Fed room to be more dovish. Less hawkish, more dovish. These were good numbers. Everything pretty much came out as expected. So nothing was blown out of proportion as it pertains to the inflation data. Okay. And I am a fan of School of Wharton, Jeremy Siegel, right? He's a professor at the Morton School. And I like the way he thinks. And I generally align with his thought process, and even he has become actually bullish now on this market. Okay, so let's try and listen to what he has to say.
You know, I think the Fed is done, but I agree with everyone on the panel. I think the fear of recession is an overhang, and I worry, is the Fed, once it sees those signs, if it does, will they respond fast enough? I mean, the bar is high for raising rates. For the Fed, the bar is really high for lowering them. I say you need to see a negative payroll number, and I wouldn't be surprised to see one in the fall. And let's see how the Fed does then. I think that's the worry. Otherwise, I think I think this market is quite well priced. I believe that PE ratios should be 19 and 20, and I think they're lower because of the fact that that fear of recession and the Fed not reacting on the other side is a source of concern.
Would you agree that the bar is much higher for lowering rates than it is for raising them again?
Well, the bar for raising rate, we have one down, two to go. I mean, today's data was good. We have one more CPI report, and then that the employment report that will come out for the month of May. So, unless both of those are super hot, you're not going to get a rise in June.
So he sees an average PE ratio now of 19 to 20. For those of you that don't know, PE ratio, an average PE ratio used to be around 15. Remember, the lower the number, the better it is for price to earnings. Okay. And so, listen, let's look at a few stock and let's look at the PE ratio. Okay. So if we look at big tech, we know the PE ratio will be high. So let's go to the big dog on the yard. That's Apple, PE ratio of 29.39. Now, these PE ratios, as you know, they move up and down with the market. Another big tech, right? PE ratio, 33.79. When you're looking at PE ratios, you have to look at other companies that operate in the same space. Some like gas and oil, they're usually low. Big tech, they're usually high because you have to first understand what's in a PE ratio, and then it'll all make sense. Okay. Then you have a low cap, a small company like Palantir. Something that's new that everybody was into in 2021. It was the hot stock, right? But a lot of these don't have a PE ratio. Why? Because they have not reported an earnings. They haven't had an earnings. Now, Palantir just had their first earnings. So as you could see, there is no PE, right? And a lot of these type of companies are very dangerous to get into during a recession because you want to make sure they have capital or at least access to capital to make it through. So if what Jeremy Siegel says is true, and according to the data, we could be looking good short term, though a lot of major investors, right, see short term and long term, they still see something coming down the road. Now, that may have been pushed from 2023 to 2024, meaning that we could close this year, 42, 43, even 4,400 on the S&P and still have a good year. But that does not mean that trouble does not wait for us around the corner, right? Some people think that it may come this year. That doesn't make it so. That's what we think, right? But it may be pushed to last year. But one thing we all kind of know, that it is lurking, right? So let's look at this. Oil, here's what I'm saying. If you go to oil, ExxonMobil, you got a PE of 7.28, which is in line with other oil companies, okay? And so this is what I want you guys to see. Watch this. When I go to BP, right? Let's see here. When I go to BP, you'll see the same thing. You'll see a low PE ratio. See? 8.28, right? But now, let's look at this, good people. This is very important for us to see. Price to earnings ratio, right? This was 6 days ago. Now, this was older. PE ratio 22 up from 19.7, right? But this was just 6 days ago, which makes it current. Without even clicking on it, you could see that 6 days ago, the current S&P 500 10-year PE ratio is 28.9. This is up 43% above the moderate era market average of 20.2. Okay, 20.2, which falls in line with what Jeremy Siegel is saying. So just like anything else, GDP and things that we expect to stay the same, maybe everything is being raised, right? Listen, one of the things that I do as an investor is whatever my thought is, I go out and look for the opposite. I look for someone that challenges my thought, right? And especially before I put a lot of money into anything. And I challenge you guys to do the same thing, whether it's stock or crypto, right? Before you put a large amount of money into anything, don't just be hungry to hear what you already want to know because you're hot to put your money into a stock or crypto. Always look at someone that totally disagrees with you and honestly give them an ear. Now, I am not 100% locked either way. That's why I have shifted. I've pivoted from bearish to not neutral, but trade the market that we're in. And that's where I am. I am happy that I am still 85% cash. Remember, anything I say is not a suggestion for you to buy, hold, or sell. I am still happy that I'm 85% cash because why? It's not at risk, okay? But I continue to DCA in until we see what this market is telling us. Anyone that gets on television or on this network called YouTube and says, I know where everything is lying, okay? And so what we're going to do is continue to trade the market that we're in. All right, in closing, good people, make sure to get those free stock. They will call to see if it's you. It's not a scam call. It is a call, okay? And make sure you fund with a minimum of $100. That will be on this video. We're going to make that the top link below, all right? And the link below that will be Stock Up You, all right? The things you don't know are costing you, all right? So we're going to leave it right there, good people. And we'll see you first thing in the morning yet again. Live, love, laugh, and learn.